in terms of the environment which they're operating, the resource industry, it looks like they've at least reached the nadir for demand for their services. They're the world's biggest supply of drilling rigs to the mining industry, particularly to the gold and copper sectors. 60% of their rigs are idle as we speak today, actually slightly over 60%. It's been a horrendous fall from grace in the last 2 years as the drilling services people, in fact mining services generally, were the first people chopped by the big miners as the commodity prices started to turn down. And I suppose Boart Longyear is the most obvious example of how hard they've been hit. They're essentially in the hands of their bankers, except they're not. They owe $560 million of debt, and the bankers have been extremely lenient, so they keep giving them more flexibility. They aren't in breach of any covenants, but they recognise that if they can't fix their balance sheet by June next year, they will be in strife. The bankers have been tolerant because in Richard O'Brien, former CEO of Newmont, they've got someone they trust. He's very good. And he and his team have done a terrific job of at least slashing the cost base. They've kind of halved the cost base in the face of a falling revenue. This is the last 6 months. 2 years ago, there was $1 billion of revenue in the 6 months. Today it's a bit over 400 mil. So that's how dramatic the decline has been. And you can't blame the management team in place for that. That's just the external environment. You can say that they inherited a balance sheet which had too much debt in it, and O'Brien makes that point that it's a good business with way too much debt. And despite the fact that they've done everything they can in terms of costs, that the steepness of the revenue decline and the kind of the time period in which it's occurred has kind of almost overwhelmed them. So they're looking at restructuring the balance sheet. Difficult when the share price is 18 cents, and it was over $4 only 2 years ago. So it's hard to raise enough equity to make a difference. But they've looked at that. They've looked at refinancing the bank debt, presumably from some sort of opportunistic supplier. That's probably not the most obvious solution. They've looked at asset sales, but with something like 60% of the world's drilling rigs idle, there's no market for drilling rigs. They do have a products business. They supply rigs and equipment to miners, which I suppose could be hived off. They've looked at asset sales. The most likely source of recapitalisation is some opportunistic investor supplying both debt and equity. So basically coming in, taking a big position, paying a little bit of a premium for the equity, taking out a big chunk of the debt, and then refinancing with equity.
But if someone comes in though and buys up that debt, then effectively the shareholders who are on the register get nothing.
Well, I'm not going to get much, and the 18 cent share price today tells you there's not a lot of not there for the current shareholders. But it's an interesting play because it's very leveraged to, partly because of what they've done to the cost structure, but also the fact that they've got 60% of their capacity idle. It's very leveraged to any kind of even modest uptick in demand for their service, and they are the world's largest and best drilling services company. As I said, they've got a particular exposure to gold. It's more than 40% of their business, and about another 20% to copper, which is one of the better metals in this commodity price slump. O'Brien made the point today at the analysts' conference that gold companies tend to have shorter mine life reserves than most other commodities, and they need to keep replenishing that. So at some point, and it may not be too far distant, they will need to start exploring and developing to add to their reserves. And that's obviously the great hope for Boart Longyear, that the gold companies and the copper companies actually say, well, we can't do nothing for much longer. Let's start drilling. And in which case, Boart Longyear's revenue line will pick up. It'll have better margins because of what they've done on costs. They've got big switch from fixed to variable costs. So he's positioned it for an upturn, and now is hoping that one comes.
So, as an investor, though, you would say, well, let's say you were a speculative investor, it's an idea at 18 cents, is it a screaming buy to get in and then hope you get that uptick? Or is that overhanging debt such a huge problem that you wouldn't want to risk it?
I think because it's so obvious that it's going to have to be recapitalised, and it'll be recapitalised, one assumes, by an opportunistic investor or investors, that the existing shareholders probably aren't going to get particularly generously treated. Vulture investors don't give away that much. So I think it looks like a classic opportunity for a private equity type investor or a Macquarie Bank type investor. Macquarie, of course, was in Boart Longyear before it was floated. They buy it at the bottom of the cycle and refloat it in 2 or 3 years' time. So that looks like the opportunity this is a 125-year-old business, so it's been through cycles before. The difference this time is the severity of the downturn and the amount of debt they were carrying. If it weren't for that debt, they actually wouldn't be in too bad a position relative to the rest of the sector.
Stephen Bartholomeusz, thanks very much.
Thanks, Jackson.